Hi traders, I'm going to cover a couple of things in this video. Firstly, it's going to be a tutorial on how to trade crypto. In this case, we're trading Fantom, FTM. So it's a full tutorial on how to trade. Whether you're one of our members or not, this will be definitely worth watching. The tutorial is going to cover two things: why we take a trade, how to find the entry, and then I'm going to go into how to maximize your profits and manage your risk. Now, this was a trade signal that I sent into my Telegram group, so it's also going to be a follow-up to that. Now, before we get into the video, I'm going to mention what my trade signals are about, my Telegram group signals. And the main question I get from new traders is, how many signals do you post every day? In other words, inexperienced traders are looking for bulk signals that they can jump in and trade willy-nilly and without any clue of the trading plan or the strategy. And I can guarantee you 100%, if you're coming from that angle, you're exposing yourself to high risk trading. Most dangerous thing you can do with your money is to blindly trade signals generated by these bots, pumped out. You pay a fortune for them and you have no idea what you're trading or what you're doing. Okay, please, whatever you do, avoid that. If you're looking for lots of trade signals, well, here they are, by the way, the alerts log over here. You want trade signals? Well, we got them. Our indicators will give you that. So my Telegram group is not about mass producing these bot generated trade signals at all. What it's about is, well, these alerts fire and I'll pick one, go into the chart, have a quick look, and if it stacks up, I'll post it into the Telegram group. And then what I do then is I spend hours after that signal doing a video just like this. This is the trade signal we had yesterday. Now I'm going to explain everything about this trade so that you understand why. And, we have a trading plan. There's a strategy. This is about education. And what I'm about is helping people become independent, profitable traders. Generate your own signals. We have that here with our indicators. Have a trading plan. We've got that right here. And learn to be independent and profitable. So if that's of interest, highly recommend you watch this video right through to the end. So the video is going to be a follow-up to the trade signal that we had last night, and it's going to be the tutorial on how to make a decision as to taking a trade, risk management. So let's get into the video. All right, there's a couple of things here. We've got these dots and we have these red breakout, red and green triangles. What I'm doing with this trade is I'm looking for an opportunity to trade with the trend continuation. So it's either a red breakout on the 5-minute or the red dot. We're ignoring any green alerts. So based on the market trading under this cloud here on the 30-minute, that's this number 2 here, and the higher time frame indicator giving us mainly red across the board, indicating that the higher time frames, in this case the daily down to the hourly, are bearish. I'm looking for the bearish opportunity. I'm looking for the trend continuation opportunity. Entry, if it's a dot alert, will be on the second candle at the dot alert, right? So we have the dot firing here, telling us that this is overextended. Now this is a repainting indicator. This dot repaints. In other words, if the condition changes, this dot may or may not remain on the chart. It's a 1-minute time frame, so once we move to the next candle, we know whether this dot sticks or doesn't stick. Now the non-repainting aspect of this is over here in the alerts log. This fired, we went to the next candle, price moved back up to the dot, and I decided to enter. And we're looking to close 80% of the position. Now you could go in from a 30-minute chart perspective as far as your position size. I would say maximum 1% of your account size would be threshold. Some people take more risk than that. So we're looking for the entry on the lower time frame. That's to get us in but we're looking to manage the trade on the 30-minute chart. So what I'm doing here is I'm going to set my stop loss up above these dots on the 30-minute, right here. Okay, stop loss above the dots, and then we trail the dots as price moves. So now I can move my stop loss down behind these dots. And we started off with the stop loss up here, and this is the risk. And my rule of thumb is no more than 1% of my account. Now that the market's moved, we can tighten up the stop and trail the dots. So we reduce the risk. What I'm looking to do is close 80% of my position early on in the piece. And it's generally 1 times the average true range. This is the average true range down here. It gives you a value at this, and right now it's telling us 0.0027. You can grab the ruler, you can click and pull it down, and it'll show you this value. You can pull it down to wherever 1 times the average true range reads. Now you can do that on 30-minute chart. I prefer to do it either on the 5-minute or the 30-minute. The more confident I'm feeling about the trade, I'll do that. I'll go for 1 times the average true range on the 30-minute. If I'm a little bit hesitant for whatever reason, I might go for the 1 times the average true range on a 5-minute chart. So I'm looking to take 80% of my position off early. And what that does, it reduces my risk. I've got money in the bag and it's reducing the position size. So in this case, if we open up the account here, account history, we can see that in dollar value, I've closed $31. I have $31 in the bag. So I can then come into the chart and figure out what I want to do as far as readjusting my stop loss after we've taken 80%. Now that I've got $31 in the bag, if this stop loss gets hit here, I'm $73. I'll lose $73. The difference, about $40, give or take. 40 plus 30 is 70. So around about $40. So I know that I'm risking $40 of my money, leaving that stop loss where it is. It's on the 30-minute time frame above these dots. Now the market wicked up and I had my stop loss slightly above these dots. The market wicked up. It didn't breach this level here. And you'll find that this is pretty good generally. These dots on the 30-minute time frame. At some stage, this trades down. At some stage, it'll pull back, and these dots will, they'll follow the price, and it'll get taken out. And if we've had an opportunity to reduce the distance between the stop loss and entry, or better still, have the stop loss now positioned below our entry, well, this is a profitable trade. At some stage, pulling this stop loss down is going to give you a break even, wherever that is. If you've got $30 in the bag and the stop loss gets hit, it'll cost 30, well, there's a break even. So it's up to you, depending on your risk appetite. The tighter the stop loss, the more chance of it getting hit, like here, for example. Determine your risk appetite and trade accordingly. If you've had a string of winning trades, well, you might get a little bit more adventurous with your stop loss. And if you've had a couple of losing trades, you'll lose a bit of confidence. So here's how to deal with that. If your confidence has been beaten up to whatever degree, and I can tell you that's happened to me many times, keep trading, but reduce your position size right down so that it doesn't matter if you experience a loss. Trade tiny sizes and keep trading. And what will happen is you'll start to see winning trades come back, and then you can increase your risk, your lot sizes as you gain your confidence. So the bottom line is this trend continuation trade, we're looking for the red breakout or a pullback. I have the dot set up on the 1-minute chart, alerts, and on the 5-minute, I'm going to be trading the triangles, alerts. Oops, let's get rid of that. So let's just quickly go back now and have a look at these signals and how do they stack up. We're looking for the reds only, the red signals on the 5-minute chart, these triangles. And you can see as I'm marking out the 5-minute chart, you'll see that that's marking on the 30-minute chart. And I mean, here's the concept. Let me just help you understand the concept. 30-minute chart. What we're looking for is on the 30-minute chart, we're going to be looking for red only. Let's just mark this with 2 or 3 of these lines here so we can see that on the lower time frame. So on the 30-minute chart, if we break out of the cloud, either bullish or bearish, in this case to the downside, we want an opportunity to get involved. So we have this rotation here. So we're looking for the opportunity to get involved when the market rotates. A bit of a pullback here, there was a pullback here, there was a pullback here. These are my points of interest. Where do I want to get involved? Okay, had a bit of a thing here. All right, let's just see what this looks like on the lower time frame. So I've marked this out here. So these would be ideal. So generally what we're looking for is the pullback, and then we want entry. We don't want to be trading this short out here. Okay, you don't want to be taking short trades when it's overextended. What we want is when the market pulls back, we're looking for the opportunity, but the question is, how do you know? So we had a pullback here, then it pulled back further. How do you know when to get in? And so this is where our signals come in handy, or our alerts, especially the triangles. We'll go down to the 5-minute here and we'll have a look at these triangles, and I'm going to mark out every triangle in this section of the chart. Every red triangle we're looking for, not the green triangle. The green triangle are going to give you a bullish breakout, and that could be a stop run or something like that. So we don't want to trade that. We want to trade after a green. We're looking for the red, so we want to trade that red signal. And we could take just about every one of these red signals and be in the money. You'd be surprised at the win rate. Okay, and this one, righto. So the signal fires, and we see it show up in the alerts log. Okay, so let's say we'll look, there's one here, Atom, 5-minute. I'm very interested in that, but we'll stick to this for now. Point of interest was here. On the 30-minute, we can see that this is trading out of the cloud here on the 30-minute. You know, we can come in on the lower time frame, and if we spot that, our entry is going to be on the pullback into the mean, this middle line. So pull back into the mean, we take that trade, and look at the outcome. There it was, and it kept going. Okay, that was the first one. These are our points of interest that I've shown here, but look where we get the signal. See, there's the signal right here. So there's our trade. Trade number 2, pull back into the mean, about here or here, whatever, and there's your trade. All right, and you can see it here. Okay, so what this is giving us, it's giving us the rotation out of the pullback, the market trends. Let's do this. Here's a trend. Okay, we'll work on a bearish trend here. That's the higher time frame, and this is a picture perfect trend, right? We're looking for short opportunities. We're going to get a green breakout, trading bullish here, and then it's going to rotate at some stage, and the red triangle will give us the rotation out. So we take that trade, and we might even get a red dot. So look for the red dots, because that's going to tell us when the market's overextended in this direction. And then look for the red triangles. Same thing here. Okay, we get a green breakout, and then we're looking for the rotation. The dots won't necessarily give you the rotation. They're going to give you where it thinks that the market is overextended in this direction. It could continue a little further. Who knows? Generally what's going to happen is the market's going to range, like it trades up, and then it ranges sideways, and then it trades down, right? And you get these consolidation zones. So what we're looking for is the break, retest, and fail of that. And that's what the triangles are going to give us, more so than anything. The trend's never going to be picture perfect, but this is going to give you the breakout. Retest and fail, breakout. Retest and fail. Retest of what? Well, this range through here, and that's what we're looking for. Okay, we get the move back, and then we get another break. Retest and fail, and that's your trade. What does it look like on the... Okay, so that's it here. There it is on the 30-minute down there. I think you get the picture. So we go for the pullback into the mean, or, you know, we see these red dots. Gets us in a bit earlier, so it's risky. It's risky. But this is the breakout here. Now that's safer. And then, of course, you know, pull back. So why we manage these on the 30-minute? Well, the lower time frame is going to be pretty volatile. So we go out to the 30-minute. And then if we set up our stop loss, okay, there's an entry here. Stop loss is basically going to trail these dots. And look where it gets you. Now, you might got taken out here. Another opportunity to enter was here. And then you follow these dots with your stop loss. It's up to you too, and you can reduce this if you want to. You can pull it a bit tighter. You can trail it on the 5-minute chart if you want to, and these dots will be a lot closer to the price. It just depends on your risk appetite. Okay guys, that wraps it up. Jump on board, the links are below. Give me a thumbs up and please comment. I would love to hear your feedback. With that, have a great day. Safe trading. See you in the next video.